Hey guys, this is Julian from the Binary Lab, and a lot of you have been requesting me to put up some videos with charts and stuff. So I thought today I'll give you a lesson on how to identify reversals so that you can trade them. Okay, so as a binary options trader, trading reversals is my bread and butter. Why? Because in binary options trading, I'm able to capitalize on very small movements that may not mean much to a forex trader, but they happen so often that is just a great way to make money in binary options trading. So, um, in order to in order to in order to give you guys the correct conception about what I deem as a reversal trade. What I deem as a reversal trade, I need to establish that taking a reversal trade is not necessarily trading a reversal. Okay, so it does not have the market does not have to reverse for you to take a reversal trade. Um, there are two kinds of reversals that you need to know about. Okay, there's one, and reversal trades can be taken on any of these two kinds of reversals. The first time is that a reversal trade can be taken on a market reversal. Okay, what I mean as a market reversal as okay, let's zoom out. I want to mark out this point because this is when it basically topped out and went down. So I'm going to put a vertical line over here to mark out that spot. Now I'm going to zoom out a little bit, and I can see that as long as it has not been going lower than that, coming from higher than that, okay, so this point on, okay, this other point there, we have that point, and we have this point, okay, these are two turning points basically, okay. So this is a actual reversal. So what does this mark that out? Reversal. Market reversal. Ta-da! This is a market reversal, okay, where it's previously been going up, right, and now it is going down. So this is a market reversal. Now, but at the same time, let's say when it's going down, are there also the times where it does go up? So let's say when it's going down, I can also define a channel of movement. So I'm going to define a channel of movement. I'm going to turn my instant messenger off. Okay. And this is a channel of movement. Like there, I use the equidistant channel tool to define an angle of movement. Right, a channel of movement. And within this channel that is downwards, a downward channel, there are miniature trends of down and up. So these are what I call the mini trends. So I'm going to put a label there as well. These are the mini trends. I call them the mini trends. Well, maybe another word for it. I call them mini trends. So let's put a different color. Let's say orange red. Mini trends. So all the stuff where you see it is going down, right? And then it goes up, and then it goes down, and then it goes up and down and up and out. All these are mini trends, and we can also trade these for reversals. It's just a matter of time frame. Obviously, if I wanted to capture this big movement, if I want to capture this reversal, I can either capture all of it or a little bit of it. Okay, as a binary trader, I can set my expiry to just 1 bar, 2 bars, 3 bars, 4 bars, 5 bars, or 10 bars, or as many bars as I like. Okay, but as a binary trader, I understand that my payout is not going to be very much different if I remain in a trade for a short amount of time or a longer amount of time. So to me, it does not make sense for me to stay in a trade for a very long period of time if I'm going to get the same reward. So this is when this is when you don't trade binary like you do trade forex. Let's say if I was trading forex, I want to take it all the way to the end of the movement. So when it comes all the way down and enters a range, and I see this into a range, how do I know it's in a range? Well, I see that it failed to break a further low, so I may just get out at this spot. You see where it says 74,650? That's where I may get out of that spot. Okay, now that's forex, but binary. Okay, in forex, let's say with a very small risk of, let's say, 30 pips, I stand to gain. Let's say when it comes back to here, I may want to get out. I stand to gain 138 pips. That is like a 4 times reward to risk. But at the same time, you know, why I like binary is because I have the peace of mind that, you know, if I know that this is going down, I'm good enough to take this for 2 bars, and in this case is a 1 hour chart, it's a H1 chart, and for 2 hours, okay, good, you know, I don't need to bang my head against the wall and worry for ages. But okay, let's get, I think you get the picture. Let's get back to the point about how you can identify you know, when to trade a reversal. Okay, when it's coming. Okay, I'm going to give you some ideas on how to catch I'm going to tell you how to catch the not just the mini trend reversal, which is actually known as pullback. So I'm going to write some. This is a pullback. There are a couple of pullbacks here. This is called the pullbacks. I'm going to put a mark there. This is called pullbacks, and so is this one as a pullback as well. Why don't I clone this? Yeah, I'm gonna, never mind. You get the idea. I think you're all pretty smart. Pullbacks. Okay, so pullbacks. All these are pullbacks. All these are pullbacks. Okay. Now, and these are like with movements within the range. So that's a different story altogether. This one here is range, but all this other one is pullbacks. So I'm going to teach you how to capture pullbacks. I'm going to teach you how to capture you know, market reversals. And one of the next things that you need to understand as well before you can actually identify a change in trend. A lot of people, okay, how do you know? Okay, I'm going to tell you first how to catch the market reversal. Okay, so I personally like to capture market reversals by drawing trend lines. So I already drawn a channel to identify this downward channel, right? I'm going to add an additional trend line like so. Boom. You can see that very clearly. And how I draw a trend line is I connect the most number of points that it passes through. So best fit line. And you know something? A downtrend, no, any trend can trend at different paces. What that means is that I could also you know, like, okay, I mentioned in my previous video that a trend is made up by 2 or more points, and a 1 and 2, these 2 points that shows a pending trend that can be reinforced by more points that fall within the trend line at the same time in the same direction as well. So what does that mean? It does not necessarily mean that just because at this point is outside of this line, it means that you know, it is a breakout of the trend. No, a lot of people think that. Okay, as a matter of fact, how often has it happened that you see that, oh, it's broken out, I'm gonna do a call trade? You know, how many times has it happened that that actually goes like just sideways and then down? Now, this is we're quite close to being able to identify a market reversal, and now I'm going to tell you what other things I'll look at. Okay, so first and foremost, when I see that it breaks out a trend, what I simply rate that as is that I see this as a weakening trend, right? A weakening trend is when the gradient of the trend lines decrease. Gradients of the trend line can also increase. You see, this is like steeper. This is a very steep downtrend. And this one out here is more gradual than the original trend line. Now I move this down further. Do you see what I mean? Do you see what I mean? You would have thought that just because this one came out, that okay, breakout of trend, and I'm gonna go for call, and you know what? The only thing that happens is that you get into a call here. You put your stop loss there if you're a forex trader, right? Or let's say in binary, oh, breakout, I'm gonna take the trade in. Huh. Didn't get it. So how do I know that this is a market reversal, and how do I capture the market reversal? Okay, there are a couple of ways to do it, and one of the ways that I like to use is that I like to identify, like I said, the weakening trends. So I draw these lines in this way, right? And then you see, it's weakening, it's getting more and more gradual, and I can also draw a line that goes eventually like that way. I can draw a line that way as well. So what eventually happens in a trend is that it goes from steep to gradual to more gradual to more gradual to sideways and more sideways, and until it becomes flat, and then it changes. Okay, do you realize that if you take any trend, you will start to notice that I could even easily do you a different example, and you would very often notice that the trend starts to decrease its gradient. You see, this is still passing, still connects to 3 points. It decreases gradient, and then it eventually runs out of steam and reverses. So, how can you find a reversal? Okay, the fact of the matter is, like I said, once again, we are binary traders. Okay, I'm teaching you how to trade based on binary right now. I'm not teaching how to trade forex. So if you're teaching if you're thinking of applying what I'm telling you to do in forex, well, it's not going to work quite the same way, but you still can catch a couple of pips, and I want to show you how to do that. Okay, so I've given you the idea of how to identify a reversal. Okay, so when you make the reversal trade, what's going to happen is that sometimes when you make the reversal trade, you will actually have a market reversal, but sometimes all you have is a pullback. But at the bottom line, as long as you win the trade, it's no big deal. It's well, goal accomplished, right? So who cares? All right. So how do we get that? Generally speaking, when it's within the initial trend, I tend to wait till the trend has graduated itself, which means that I may not necessarily take this one because it falls within the original trend line. But when it does that again, okay, plus if you know forex, this is also known as it's a multiple bottom setup. Okay, you can count this as a triple bottom. You can consider just this point, and then we have a W, just that the other side is not formed yet. So yeah, if you want to consider, it's up to you. If you want to consider this point or not, you can or you cannot. You may or may not. That doesn't matter. Okay, but I would be more keen about this particular reversal. Why? Because it had already graduated itself from the previous trend. It is more gradual than the previous trend. This is the better setup. Plus, it establishes a lower low. It doesn't have to be a lower low. It can be a similar low. I have this very cool indicator right here that paints green if it's a low within a previous low, and it paints blue if it is the ultimate low. Okay, for that session, or within what the chart can show you. So now the next thing that I look at is the separation of the moving averages. I have a lot of moving averages on my chart, and just to help you see that I am not that cruel, I'm going to zoom in a little bit more so you guys can get a better view. Yeah, like that. Would it be cool if I removed a couple of lines? I think that would be cool. Let me get rid of a couple of trend lines, and you guys can have a better view. Delete, 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 and close. What? Still so many? Okay. Let me get rid of a couple more trend lines. Jeez. That's a lot of trend lines. Okay, let me get rid of a couple more. Oh my god, yeah. Let's just get rid of a whole chunk of them. Because some of these are indicator drawn, so they'll repaint themselves anyway, no big deal. Oh my god, what is this? Monthlies, trend lines. Okay, this should be the ones. Yeah, there we go. Okay, cool. Right, now, what I wanted to show you is that I look out for, what I look out for when I know that a reversal is going to happen is that I use moving averages, and I like to, I use the fanning of moving averages to identify when a pullback, which is a mini reversal, or a market reversal is going to happen. How do I know that? Okay, uh, I have a couple moving averages. So the gold one here is 200 MA. The purple is 100 moving average. The green is a 55. The what do you call that? This is a 21. We have 711 right here. So, now, when I see them separating themselves out, well, it's fanning out, right? Versus constricted. Okay, you notice especially the on the shorter moving average periods like the 21, the 55. These ones will kind of like cluster up a little bit more than the rest. When they open up, when they open a real wide, it is you know it will be a matter of sooner or later before it comes back around. The first trend is not a wise idea to do. Well, of course, if you know how to catch a nice time frame, if you use a, you know, okay, let's just say fanning out. If it's fanning out for a period of time, the reversal is around the corner. We have ways to signal that. Okay, I see in the lowest time frame it starts to cross. Right there, I can catch entry right about there, right? And I will not do these stuff. Why? Because I see that my moving averages are messed up. I will wait for them to once again fan out. In this case, no. I wait for them to fan out, which in this case, no. And but at the same time, okay, in case it did fan out again and again, yes, I would take more entries. But how would I then take these ones? Like I said, the MA had the trend line had graduated itself to be less and less steep, and at the same time we also have a bunch of lows, market lows. Okay, maybe a horizontal line doesn't quite do the trick. I'm instead gonna do a trend line, so I could connect these bottoms like that. And okay, support resistances do not necessarily have to be a straight line. They can also be on a slanted line. Okay, and what I tend to do is that, okay, I've got my first point, I've got my second point, I've got my third point, and 1, 2, 3, and I would say that it would be fair enough to say that, okay, the more points confirm the trend line. Okay, so now we have fourth point, we have fifth point, and then, you know, fourth point I would take a trade, fifth point I would take a trade as well. I will also coincide this with other indicators because I know that this is my high. Okay, so I could even use a Fibonacci. I could draw it. There you go, 161, 161, a little past the 161, and we know that, okay, it's fairly legit. But we got fanning of the MAs. We got you know, hitting on a slant line has been confirmed by a couple of points, and oh yeah, Bollinger Bands. Look at how it's contracting. Okay, so when it's contracting, it can only mean two things. It could mean a further breakout to the downside, or it could mean a reversal to the top side. Now, in forex, this is gonna screw you because if it was forex, you would totally want to avoid this whole area, because what if it broke out down and you're like, oh shit, hit a stop loss. Well, but in the binary, well, I could have gone in a couple of times, you know, like, in fact, in the binary lab during the webinars, we had many situations like this, and we're actually going like, we go every single time we're going in. Not necessarily H1, maybe M5. So I'm gonna just switch this to M5 and show you the thing. Yeah, let me do that, show it to you. There we go. So this is M5, same principles apply. Just want to close this video real soon. Look at the trend graduation. Okay, first of all, just recap trend line. The trend gets more and more gradual, right? It's more and more gradual, and then at a certain point, boom, out. Now, look, when all the MAs cross, you also know that that is a reversal. Let's say a larger pullback. Okay, there are many small ones in there, but there's a big one. So here, I would have found this one because I see there's a lot of a fanning of the MAs, and then on the smallest time frame, when I see that it kind of like crossed up, and then I look into taking a trade. Okay, same thing as here. Even this, I depending on the time frame, you can do a quick scalp with a 2-bar or something like that. All right, so I hope this training you find useful. Once again, this is how I do it in binary. Um, of course, this is not the full template. This is not the full range of signals. I mean, not full range of indicators that I use. For those of you who wants to get hold of this, the setup that I use with the rest of the other indicators as well, you're most welcome to join me in my community, the Binary Lab. I conduct live webinars for every day of the week, unless there is a bank holiday or public holiday, and these are sometimes in the US session, generally in the US session, sometimes also in the Europe and Asian sessions too. So we have got about 3,000 people, 3,000 people in a community called the Binary Lab, and we welcome you to join us in there. I'll be your trainer, and I'll be teaching you guys how to plunder the charts for opportunities just like this. See you, like and subscribe. Goodbye.